We got more huge news for stock market investors coming from President Donald Trump as he announced an increase in tariffs on Canadian imports. I'll detail the latest from these announcements and what it could mean for stock market investors during a week where we saw many announcements on tariffs, and I'll include all of that in today's discussion and what this week overall has meant for stock market investors as it relates to trade policy and trade barriers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so President Trump surprised markets this past week with a letter announcing a 35% tariff on Canadian goods. But don't just look at that headline number, because there are some carve-outs, some significant carve-outs. Um, Energy imports will not face that 35% tariff. Energy imports will face a significantly lower tariff. But this 35% tariff is an increase from the 25% duty that the president announced on April 2nd. So Trump's letter also made clear that sector-specific tariffs on steel, aluminum, autos, and soon-to-be implemented copper duties will be excluded from the 35% rate, as those goods already face tariffs from 25 to 50%. Also, there is a carve out for USMCA compliant goods, and that is significant, as some estimates suggest that those imports that are compliant with the United States, Mexico, and Canada agreement that was signed during the first Trump administration, those imports make up roughly 40% of U.S. imports from Canada. So, if you bring it all together, the compliant goods from USMCA are roughly 40%. Then you have the energy that's tariffed at roughly 10%. Then you have the sector specific, like copper, steel, and aluminum at their own rates. And then now you have this at 35%. And if it's getting confusing for you, believe me, it is confusing. And that's a thing that I also wanted to discuss is, on top of the tariffs that businesses will have to pay to import products, they now have an additional cost, which is the calculation of all of these tariffs. Businesses now have to sit down as an entrepreneur, as a business owner. Some of you might be business owners. You have to sit down now and calculate the different prices. What's it going to cost you? How much do you want to pay your supplier now? What's the new currency exchange rate? What's the sector specific tariff on this particular good? How will my products be categorized? What's the actual category of tariff that I have to pay? Do I need to find legal support now? Do I need to hire people to actually calculate these tariffs now so that I can understand my business and how I need to price my products, right? So that's an added cost to business now, in addition to these costs of tariffs. So the costs on businesses are increasing meaningfully here in 2025 under President Donald Trump's administration. Now, to offset those higher costs, the administration did pass those tax cuts earlier in June, or late in June, I should say. So that can help offset some of these increase in costs here as a result of this tariff policy, which is going to make it much harder to conduct business across the board. It's going to be harder to conduct business if you're an importer. And even if you're not an importer, it is going to have implications for your business, as the whole global supply chain is being disrupted right now as a result of these tariffs. Businesses are making decisions about where they're going to manufacture, what products they're going to manufacture, how much of those products are they going to manufacture, what are they going to price these products at, will they keep the prices the same? Unlikely, because that will hit their profit margins significantly. Who will win and who will lose? What will be the second and third order consequences of these tariffs? There's a lot to digest here, and it's still very early days, and we still don't have any kind of finality in these, right? Overall, if I look at what happened this week, remember on April 2nd is when President Donald Trump first announced these increases in tariffs. And the deadline was actually April 2nd. He announced the tariffs. And then, as a result of the backlash from the business and investor community, President Donald Trump paused a lot of those tariffs, right? And then um, July 9th was the deadline for that pause to be ended. If countries didn't sign deals, the tariffs would revert back to the rates that the president set on April 2nd. And here we are, we're July 11th, right? So this was the week that the tariffs were supposed to be implemented at the higher rates. But what actually ended up happening, if you look at the actual tangible results of these announcements this week, is that the July 9th deadline was basically extended to August 1st, right? Even though there was a lot of theater surrounding the announcements and the letters that were sent out, basically the tariffs were supposed to begin being collected on July 9th, but now the beginning of those collections will be August 1st, the higher rates. Okay. So I think this was the president's way of saving face and extending the deadlines because the president was taking a lot of heat for backing out and backing down on a lot of those increases in trade barriers. And this way, he got to extend the deadlines and still say that, look, I increased tariffs, I'm putting pressure on other countries, I'm being tough. Like that's the whole, I think, gist of what happened this week in terms of the actual tangible results. If you uh, kind of look past all of the theater surrounding these events, which of course politicians, that's what they do. That's what, they're really good at doing. It's just the way politics work. No, specific politician is any different. They all operate in the same manner. So for investors, this reminded us of the risk of these tariffs, right? The market, I believe, had been getting a little bit too complacent about this tariff policy because the president had been pausing and extending the pauses and responding to investor sentiment, right? When the stock markets collapsed, the president stepped in and paused the tariffs to support the stock market, is what investors assume, right? There was no clear indication that's why the president did that. But investors assumed that the president responded to the falling stock market. And so they feel comfortable now that if the stock market should decline, that the president would step in again and change the tariff policy in order to make sure the stock market doesn't crash too much, right? Which I would caution investors against feeling that kind of comfort here. There is no clear indication that the president cares about the stock market. The president is conducting this trade policy because he feels the United States is being treated unfairly by its trading partners. And he feels that by increasing the tariffs on the trading partners, that he can negotiate a better deal for the United States, which we haven't yet seen any deals. And I say we haven't seen any deals yet. Uh, I should kind of clarify. We did get a deal with the United Kingdom, but the deal with Vietnam, I've read some reports this morning that the deal with Vietnam is under question. The president thinks he has a deal with Vietnam, but Vietnam just came out today and said that, wait a minute, we didn't really agree to this. We thought we were getting a 10% tariff rate or something around that level, but the president announced a 20% tariff rate. Like, we wouldn't agree to that. And I thought the same thing. I thought, why would Vietnam agree to this deal? The deal that was announced was extremely one-sided. The United States would charge Vietnam 20% tariffs, and Vietnam would open their economy to U.S. goods. I was skeptical as to why Vietnam would agree to a deal, such a one-sided deal like that. And I'm not surprised to see developments coming out today that show that, no, you know what, we didn't really agree to that. So a lot of question marks. I would hate to be a small business that's importing goods from anywhere outside the United States. I would hate to be in that position right now because you really just can't make any decisions because you don't know what the calculations are. Like, how many of my item do I order for this holiday season, right? If you're planning for this holiday season, how do you plan for that? How do you know what to order because you don't know exactly what your cost is going to be. Because if you make the order today, you're not actually going to import that product for like another 2 or 4, maybe 5 months from now. You don't know what the tariff rate is actually going to be in 2 months or 4 months. So how do you make a decision on how much product to order for the holiday season, right? And if you don't know how much you're going to pay for the product, you don't know how much you're going to sell the product for. And if you are going to charge a significantly different price than what you were charging last year during the holiday season, you don't know what your sales are going to be like. If you were accustomed to selling your product for $10 a piece, and now because of tariffs, you have to increase the price, otherwise you're going to lose money, and you're going to raise your price to either $12 or $14. So a 20 to 40% increase in the price that you're going to charge your customers. You don't know what your customer response is going to be. Of course, as price goes up, demand goes down. So you know you're probably going to sell fewer units than you did last year. But how many fewer units, right? You don't know because you haven't experienced this kind of significant change in tariff policy in probably your lifetime as a business owner. So business owners are facing much higher costs as a result of this uncertain trade policy. Now, hopefully, in the longer term, it will actually end up benefiting everyone, and we see a more fairer trade policy, and we see a return to an increase in manufacturing and a return to an increase in global economic output. But the early results indicate that there's going to be a lot of near-term headwind, a lot of near-term pressure, and the longer-term implications remain to be seen. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.